Good evening, ladies and gentlemen. I'd like to welcome you to yet another weekly investor forum. I'm your host for this evening, Dan Theok, Senior Vice President of Investment Banking. I'll also be joined today by our special guest speaker for this evening, Mr. Kurt Booth, Chief Executive Officer of Medical Disposable Supplies Limited. We encourage our viewers to post their questions on social media and remember to tag us with the hashtag #MILInvestorForum. If you enjoyed this program, be sure to share, to like, and subscribe on our YouTube channel. We'll also be featuring a market segment on foreign exchange, so be sure to stick around until the end of the program. I'd also like to give apologies to our chairman, Christopher Berry, and Gary Pert, who won't be able to join us today. Medical Disposal Supplies Limited is an island-wide distributor of healthcare and consumer products. Its product range includes medicines, vaccines, injectables, hospital supplies, medical disposables, consumer products, and beauty items. The company was founded in 1998 and began operations in January 1999. In 2006, GSK Vaccines became MDS's first formal distributor. The company's first divisional expansion came in the pharmaceutical segment through the addition of Dr. Reddy's Laboratories, a multinational branded generics pharmaceutical company headquartered in India. MDS was nominated for the Best of the Chamber Award in 2016 in the Medium Enterprise category. There it was judged on its overall performance in areas such as finance, business growth, and innovation. The company operates 3 business divisions, which include medical, pharmaceutical, and consumer products. MDS was listed on the Junior Market Stock Exchange in December 2013. I'd like to take this moment to remind you that if you're seeking to expand your portfolio or embark on your very first investment journey, Mayberry Investments Limited can guide you in achieving your financial goals. Follow us on social media and visit our website at www.mayberryinv.com to learn more. Our social media handles should pop up somewhere on the screen. Now let's introduce our special guest for this evening. As I said before, it's Kurt Booth, who graduated from Nova Southern University in Davie, Florida, with a bachelor's degree in business administration, specializing in banking and finance. Following the completion of his studies, he served as a financial advisor at American Express Financial Advisors, licensed as a securities dealer with the New York Stock Exchange and the National Association of Securities Dealers, as well as the Florida Department of Insurance covering life, health, and variable annuities. He then moved on to portfolio administration with a global mutual fund company, Franklin Templeton Investments. I'm impressed. After gaining his MBA with a concentration in entrepreneurship, Mr. Booth returned to Jamaica with the intention of applying the entrepreneurial background to grow MDS. This dream was realized in 2006 when he joined the 11-member team as general manager in the company's 6th year of existence and piloted the company to listing on the Jamaica Stock Exchange through none other than Mayberry Investments Limited in December 2013. Since then, the company has grown from a distributor of hospital items to also being a major player in the pharmaceutical arena, and most recently, the fast-moving consumer goods segment. Today, Mr. Booth will give us an investor update on MDS. Welcome, Kurt. How are you doing?
Good. Thanks for having me.
Excellent. Right, so before we jump into the questions and answers, I would like to give an investor's perspective on MDS. And so I'd ask my folks to put that up on the screen. And the first thing I want to speak to is the fact that this stock price has traded from a high of $7 to a low of $3.50 in the last 52 weeks. Today it's trading at approximately $4.85, which reflects a PE ratio of 72 times, which sounds quite high when you consider the junior market average is 23 times. But when you dig into it a little bit more carefully and peel back the layers of the onion, you'll appreciate that the trailing earnings were only $17 million. Now, this is a company which in 2017, 18, and 2019 topped $100 million in earnings. So obviously, they've had a little bit of challenge through COVID. Has a total market cap of $1.27 billion. And on the next slide, we'll talk a little bit about their last sets of results, which were for the 9 months ended December 2020. And it sort of shows the COVID impact. In fact, their profitability fell from $29 million in the 9-month period prior to just $12.2 million in the last 9 months. And despite the fact that they were able to maintain their sales levels and in fact grow it by 2%, they did have some increase in selling and promotional costs, about 22% increase. And we'll talk a little bit about that because I know there was some directed advertising going on. And they also had some increase in their finance costs. And I believe there was a one-off cost of about $14.5 million in there as they've beefed up their financing to grow the business. And again, we'll talk a little bit about that as we go on. Company has $2 billion in assets, $846 million in shareholders' equity, and as I said before, has made $29 million profit. Now, if we go to the next slide, I'd like to take a look at the quarterly performance. And again, what you see here is that in prior years, we've seen much higher levels of earnings. And in the last 3 quarters in particular, we saw where in first and second quarter, they actually had negative results, which is obviously at the onset of COVID. We can see in the third quarter, which is to December, how they've turned that profitability around, made $25 million in the quarter. And now we eagerly await the next quarter and full year results. Now again, that stock price today of $4.85, using the market average of 23 times, it's anticipating a $50 million profit for the full year, and that would justify the stock price. So we wait anxiously for the next quarter's results. And Kurt, I believe your year-end audit numbers are due by July 14th.
Yes, within a week.
Within a week,
Yeah.
And I know you can't speak to the results, but people, I don't think they're gonna disappoint. I'm gonna predict that the full year results will be in the region of what that stock price is reflecting, which is about $50 million in earnings. And that's my review on MDS. Into the questions. Kurt, first one for you is, currently MDS is focused on growth. Do you also plan to expand your footprint outside of the island anytime soon?
First of all, thanks for having me.
My
Very,
pleasure.
very good to be
Our
here
pleasure.
and to share with the investing world. I wouldn't be truthful if I said that we did not have our eyes outside of Jamaican waters.
Right.
However, I think that there are a few priorities before we make that particular leap. We have to remain very focused on our core business and what we offer here in the Jamaican market. And we see a lot more upside and things to take care of here before we venture outwards, because we have to be very careful. If you try to be all things to all people, you will dilute your focus and you won't be able to represent any position well. So we're not putting the cart before the horse, and we see a lot more potential here in Jamaica before we make that step.
Okay, I think that's a good answer. And with $1.7 billion in sales, if you think you have more growth potential within the island, we'll talk a little bit about that. I think that's a great move. Second question for me, tell us more about your recently expanded consumer division. How has performance been in that area?
It hasn't been bad at all, given the landscape with all the effects of COVID. This is the part of our portfolio that is more dependent on the discretionary income of our patrons. So, you know, at MDS, we're in the business primarily of selling need and not want. So we have 3 divisions to give a little bit of a background. Our pharmaceutical division, which is where we offer our prescription drug items to the pharmacy network across the length and breadth of Jamaica. Our medical division, which we offer our hospital items, disposable medical items to hospitals and healthcare facilities, doctors, etc. And the consumer division, as we're referring to right now, which is just about everything else, the supermarkets, the wholesales, beauty shops, and the like. So in this particular area, we have not performed badly at all. It was a strategic move because if we were concentrating on distributing within the healthcare arena only, that would be a little bit limited as a distributor. So we ventured outwards into the other channels to be more of a full service distributor. So not only could we offer more to more customers, but we could offer more to the partners that we represent. I could give you an example. Suppose a drug company has an over-the-counter product that is sold in a supermarket or a gas station. Launching the consumer segment now offers that lane for us to pursue. So with that strategic focus, it's constantly building, and we're very, very satisfied, especially with the COVID challenges where we are right now. And I must say that it is growing and we're blessed.
Excellent. And what percentage, roughly speaking, of your sales do you think of this division today, and where do you hope to grow it to in the next 3 years?
This division of our sales is perhaps not even more than 5% right now. Overall, as a company, we are long-term focused, right? So the same holds true in this division as well. We can see ourselves doubling that this year, and in the next 3 years, we could even double that after the end of this year. So it's a constant growth pattern, and as I said, we are long-term focused.
Excellent. Speaking of long-term focus, the partnership with Cornwall Medical and Dental was a part of the owner's succession plan. Considering that MDS is a family-operated company, would you say this move also played a part in your own succession planning?
Absolutely. It plays a part in our own succession planning and our overall growth as well. I must say, I think succession planning in this country is something that's widely overlooked, right, and should be taken seriously. So even our partners that we have taken on, I must commend them for their insight and looking at the big picture. You know, a slice of the melon is bigger than the whole grape, right?
Right.
And so where we decided to join hands as partners and work ourselves onto a bigger share of the overall pie, that certainly played a part in not only our succession planning, but our strategic growth planning. Over the years, we have passed through different phases of the growth cycle, and at a point in time, you can grow organically to a certain point and no more. You have to look outside of organic means. And this certainly fell within our strategy of going into acquisition mode. In addition to that, we particularly targeted growing our medical division. Doing well in the pharmaceutical division. The consumer division is relatively new, but the company started in the medical section. It's in our name, medical disposables.
Yeah, hospital supply.
And this is a very technical area. It's what I refer to as a non-linear area. It's not very straightforward at all. You really have to know what you're doing. And because of the difficulties in navigating this area, they form a natural barrier to entry. That natural barrier to entry now gives us a competitive advantage. If you are strong in an area that most aren't, then I don't think it's rocket science that we should expand this area where we have our competitive advantage towards being market leaders. So growth by acquisition, it naturally, instantly allows you to significantly increase your market share, which was part of our long-term planning.
And speaking of that long-term planning, and I do think the partnership with Cornwall Medical looks like a match made in heaven. So top line sales, 1.7 billion again. You know, what's your vision in 3 years to 5 years? How do you hope to grow your sales? Do you think you can double your sales in 5 years? I mean, what are you looking to achieve, generally speaking?
Well, I have to be a little bit guarded.
Generally, not just because of Cornwall Medical, but because of your 3 to 5 year plan.
However, absolutely, we envision growing our revenue. Growth by acquisition naturally is not only a step in that direction, but it gives you a leap in that direction. But overall, even organically, we envision ourselves growing in this area. You see, we embarked on an internal strategic plan, which was titled Thinking Inside the Box. You see, sometimes you're so focused on everybody thinking outside the box. It can be quite easy to neglect your internal infrastructure. So that plan was geared around growing our internal infrastructure and building our support systems so that it could support the growth at a later date, especially when you were to go into acquisition mode, which now faces us. So we're very grateful. We have a wonderful team, a team that we're very, very confident will rival even the greatest competitor. And we're a family, and I give a lot of thanks for the competent team that we have who have brought us here today, and so far so good. We're very blessed.
Excellent. And again, on that growth path, we see where in the last quarter that came out that you sort of ramped up on your advertising, and you speak about growth initiatives that are coming. Can you again speak to that in general terms so we can appreciate why you put $20 million extra into your marketing expenses, and how you see or view the return on that spend coming back later on?
Okay. Well, first and foremost, traditionally we have not ventured into a lot of marketing and advertising because we have been heavily concentrated in the pharmaceutical and healthcare sector. So by law, you're not supposed to advertise ethical pharmaceuticals,
okay,
right? Those need to be prescription generated. So you would not have heard a lot of noise from us on the advertising front, especially as far as products are concerned. As we venture out into the fast-moving consumer goods segment, naturally you'd see a bit more advertising from us. That would be one of the reasons.
Okay.
In addition to that, I think we owe it to our shareholders to project a little bit more. I think our culture has been a little bit modest. We've always had a stealth-like approach and flying under the radar. And culturally, that's how we've been able to creep up on some competitors and surprise them. That by the time you notice us, I think it's a little too late.
Right.
However, we have to think bigger picture as we grow, and I think we have to project more. We've been fundamentally sound to the point that even more than other companies who may even be listed. But because there are other companies there who are more of household names, I think they've enjoyed a better market performance for that reason. First and foremost, we always endeavor to remain fundamentally sound and continually improve in that area. But I think is a little bit of time that we add a little style to the substance and project ourselves, especially for our shareholders, to keep the world informed. That's our movements.
I'm with you. I'm a numbers guy myself, so I'm looking forward to the audited results so I can come back to the people and tell them I told you so. Next question. Cornwall Enterprises Limited is MDS's first subsidiary. What are you looking forward most to from this venture?
Well, looking forward to a lot of things, looking forward to a lot of great things. I think number one on the priority list is to settle in and align both companies, right? Speaking about fundamentals, that's a fundamental principle which we cannot overlook. We look at the numbers, right? As you said, you're a numbers man, of course. You have to look at the financials, and the numbers have to make sense. But we're very big on culture. We're very big on culture, and we have a lot of soul in our organization, and we can't overlook that. So we have to settle in. We have to achieve a lot of synergies and align both companies together. In mergers and acquisitions, historically, they're on record. There are some mergers that have not gone off too well. The chief among these, I think, is AOL Time Warner. That's the first one that comes to mind. There was a huge culture clash, and I think that was at the root of the reasons why it did not succeed as they had hoped. So I'm very, very hopeful to achieve the synergies first and foremost. However, greater than that, I'm excited of the new areas that present itself. I'm very excited about expanding our market share in the medical segment, right? And as we trek onwards to becoming a clear market leader in this area. So a company that was our friendly rival in years gone by, we've joined forces to capture a greater level of market share. And there's some areas that they cover that we don't, and vice versa. So we're stronger together. In addition to that, this company has a dental supplies division. So that's a new area for us, as we're always in search of niche areas to cover, and that's a niche market that we're very excited about. Smaller segment, but definitely we see where we'll be a key player. We see where we will definitely be the market leader in this area. I think I can confidently and proudly state that. And in addition to that, we become a little bit more vertically integrated. Yep. Along with that, there's a retail division which owns and operates 3 pharmacies, right, as well. So we're excited about the new areas that we're going to bring to the MDS portfolio. Right.
And again, I don't want you to speak too much to it. I expect through that merger you're going to have lots of synergies that should certainly help to reduce distribution costs, yeah, and improve the overall bottom line. Next one for me. After 2 consecutive quarters of losses following the pandemic, currently, would you say the company has completely rebounded from the adverse impact of COVID-19?
Well, yes. To be fully transparent, I think we went a little bit over 2 quarters, but by the 3rd quarter, as projected, yes, we got back into the black. Why COVID affected just about all areas. Even though most of what we provide are actually essential items, we were not completely insulated from the effects of COVID. When you have a country on lockdown, even healthcare facilities were on lockdown for a time. You had hospitals that weren't seeing traffic. You're talking about only emergency cases or emergency surgeries that was prioritized. So even pharmacy closures of pharmacies, closures to certain sections of Jamaica. I think we found out just about how much the parish of St. Catherine contributed to us when that entire parish went on lockdown as well. So yes, we did face some internal shocks. In the spirit of transparency as well, I'll also state that we did have some internal challenges prior to that, that was only compounded by COVID. We were, as I said, our strategic plan found us doing a lot of retooling, right? It's clear in the numbers, our administrative costs increased as well because we were preparing ourselves for growth later on. So, putting all that together, we found ourselves in unfamiliar territory. We've grown profits and revenue year over year since the inception of the company. And when COVID hit us, right at our year end, beginning of the new year, we were like fish out of water for the very first time. We were in the red for a period of time. But, I mean, we held firm. We experienced about 8 months in the red before we broke even and got back into positive territory. So what we did is that we put in certain strategies, and our initial analysis, we sat down and we said, you know what? There might be a very good chance that COVID will not wipe out all mankind. And it's quite possible that some of us will actually live beyond COVID. So while there's a downtime here, I think it's a retooling opportunity, and it's an opportunity to position ourselves, right, for post-COVID success. And what we've done is that we actually use that time to reinvest, right? It's a risk, but it's a calculated risk, nevertheless. And I think that our efforts are bearing fruit. All of those negative effects from where I sit are more in the rear view mirror, and looking through the windshield, I see far more positives. And as far as I can see, we are headed in the right direction.
Great. Yep. No, again, not implying this in relation to the acquisition. I've certainly had a lot of clients going out and looking for acquisition opportunities in this climate, in this environment, and then using that to give them a stronger base to go forward. And I certainly feel, just my opinion, that that's how you've positioned yourself. And I would certainly like to see you getting back to your former glory of topping $100 million, annual profits per year.
Not more than me.
Yeah, I'm sure. And again, to declare interest, not me personally, but Mayberry is a top 10 shareholder. We obviously helped to list you back in 2013 at $1.83. And now that stock price has grown by more than 200%. And I still think it has legs in it if you guys can pull off this acquisition in the right way. And you certainly have the background and experience to make that happen. Next question for me. Several key pharmaceutical players worldwide are part of the COVID-19 vaccination effort. Is that something MDS is also looking forward to?
To be quite honest, we're not looking in that direction. I think that the vaccination efforts is more of a social issue, and right now that's more of public sector territory.
I'm with you.
The government is leading the charge there, and no, we absolutely have the ability to, and we have the reach in order to provide any support in that area. I may also add that MDS not only has a strong vaccine portfolio, but I think this is an area in which we are leaders in this Jamaican market, the area of vaccines, which incidentally, funny enough, that suffered for the first 3 months of COVID.
Really?
as
Normal
well.
vaccines, yeah.
Right, but it's back on the rebound. However, this is more of a public sector area of concentration.
It's not unthinkable, though, that we may have annual booster shots thereafter that then becomes something that the private sector focuses on.
We're always open, and at the end of the day, we're in the business of business.
Yes,
right.
Yes.
But we're poised. We're nicely poised to support this area if need be. So.
Agreed.
Yeah.
Great. Next question for me. The company is in acquisition mode and has an appetite for taking on more. Is an APO a possibility somewhere down the pipeline?
It is an absolute possibility, of course. Part of going public was for all types of growth opportunities, and at the base of any growth opportunity, you have to capitalize your business, right? So one of the benefits of becoming a listed company has been the options or the different vehicles that you could use to capitalize your company. And of course, an APO definitely is one of those. So it is an absolute possibility. Right now, that card is not at the front of the deck, but it is an option, and it's very nice to know that we do have options.
Yep.
Right.
And a very capable, friendly investment banker who would love to help you in that regard. And I don't need to tell you, in terms of managing your debt and driving the growth, it's certainly something you should give consideration to, and don't hesitate to give me a call.
Absolutely, I have the number.
Yeah, man, moving right along. With expansions underway, how do you plan to reduce the impact of direct and operational expenses on your margins?
Well, that's a good question, and I don't know how you completely avoid the increase in costs. From where we are, we still have some growing to do, even internally. So the building of our infrastructure is always a priority. So some people will see it as a cost. We see it as an investment, all right, which will bear fruit going forward. As far as we're concerned, right here and right now, I think managing this cost is still within reason relative to even where we are in growing our revenues. Even organically, we part of investing internally and part of our turnaround strategy has seen us increase our overall margins as well. So I'm very hopeful that any increase in costs will be a mere investment relative to the returns which we anticipate.
Excellent. And again, I'm really looking towards the synergies and opportunity to reduce costs, distribution costs in particular, some administrative costs, and improve your bottom line coming out of this, I'm going to call it a merger, acquisition/merger.
Right.
MDS has previously expressed the need for better talent in several strategic positions to maintain its competitive edge. Do you plan to develop a strategic partnership with universities as it relates to the training and recruiting?
In that regard, not necessarily. We intend to look at talent coming out of university in other strategic areas, which I can mention at another sit down.
Sure, of course.
But of course, listen, your company is your people, right? And you're going to get the level of output from the level of input that you have. Mm-hmm. So talent management has definitely is a priority as far as we're concerned. The increase in admin costs, as they're reflected on paper, has been a direct result of increasing the quality of our talent and recruiting. So on paper, it states admin costs. For us, that is part of the investments that we're talking about. And here you have a company which is a wonderful case study for in terms of entrepreneurship, coming from a sole trader, coming from a full staff complement of one, right, to now looking to lead a team of over 100. And you can only grow through building the talent that we have. And now when you look at it, our competitors are different from they were in yesteryear. So we're going up against the biggest giants in the country. And if we are to be formidable, then we're going to need the level of talent in which to do so. And we refuse to be out-resourced. Right, so we love a good fight. We love competition. As a matter of fact, we love being David in a Goliath fight. So we continue to invest in the best slings and stones that they are possible.
I appreciate that. With
right.
$2 billion in assets, you're not exactly a small David either. So you're quite modest.
Right.
And folks out there, again, I want to remind you, please feel free to send any questions that you have in on social media, and we'll do our best to try to entertain that. One more from me. What are your thoughts on the government's 10-year strategic plan for renewal and rebuilding of the public health sector? And is MDS poised to benefit from this?
Well, this plan is, as I understand it, is part of the 2030 vision for our country in achieving some level of first world status. So as I understand it, this is a part of the plan which is a subset of the overall vision, and that is for healthcare. I think that as far as a vision is concerned, certainly I do find favor with it. How achievable is it? Is it too ambitious? Some critics may say that, but every journey begins with a vision and then you chart the course for the destination. So yes, absolutely. This involves upgrading the healthcare facilities and the like. And by doing so, if we stand to benefit, I'd answer that first of all to say that we all stand to benefit if our country upgrades our healthcare facilities. You see, in what we do at MDS, we look at the entire landscape, if we are in the healthcare business, then the accent is over the care, right? I mean, it's even reflected in our tagline. We don't have a commercial tagline, right? What we state is simply taking care. And by that we mean if we focus on taking care of our people, our patrons, who could be anybody, if you're talking about having a healthcare challenge, which I might add on the business side of it, it doesn't hurt that your target market is open to just about anybody. But we also want to take care of our healthcare facilities, and we think it's actually our civic duty to do so. And we support any initiative, right, to upgrade our healthcare facilities, because we never really become truly mindful of the state that they're in until a personal situation hits close to home. So no, absolutely, if we are part of taking care of our facilities, then I think that we're pretty confident that we would be taking care of business in the process. So we are supportive of that government initiative. We think it's a wonderful initiative. And as I say, we as a company, business-wise, we definitely are poised to benefit from that. You're talking about even expanding your ability to tend to individuals. You're increasing the bed count of the hospitals for which we are providers from. So naturally, we stand to benefit. Not to mention increasing the bed counts. Not to mention that we could actually sell them some of the beds. I hope they're listening, right? But the short answer to your question is a resounding and emphatic yes. We are very well poised to benefit as well.
Oh, thanks, I appreciate that. Great. Now moving on to the questions coming in from social media. Let's see what we have. First one comes in from Edunomics Limited, who asks, being a medical distributor is a venture into medical technology in the forecast for the future. Is there a question, guys, or is that a statement? Being a medical distributor is a venture into medical technology in the future, in the forecast for the future.
Okay, well, I'll comment. I'm not sure if it's a question or a comment, but what I can say is absolutely, in constant retooling, we always want to invest in technology, right, and beyond the cutting edge. In technology, in terms of equipment, we are more on the disposable hospital side of things. We are not heavy in the equipment game yet.
Right.
However, we've been studying it for years, very closely, right? So what we tend to do is put things in the pipeline and build up, so you always have something coming out. So these are some of the areas that I would have referred to earlier, that there is some upside locally. Some other areas that are in front of us which we can venture into as part of our expansion.
Just natural
this happens to be one of them, and we've taken a look at it, but we have to strike at the right time.
Sounds good. Two more, it looks like, coming in. First one is from Ryan. You guys switched that on me, so let's do this one from Philip Burgess. Philip Burgess asks, does the new acquisition bring with it a stake in G West as per that company's top 10 list? Are there synergies to be gained due to suck an ownership stake, depending on how it is booked?
No. No, we will not be a part of the G West venture as far as having a stake is concerned. The closest we'll get to it is that one of the pharmacy locations is actually in the G West building, but that's as far as it goes for now.
Right. Okay, great. Thanks for that. Okay, so we also had some giveaways earlier today, and our winners include Mary Young 3150, Aisha Chanel, and Chantel Douglas, and NIKIP 2031. I apologize, guys. I'm horrible at reading social media handles. Okay, moving on. We're going to go over to our top stock picks. Great, and this week I want to look at Lascelles manufacturers, LASM. So first off, we look at the current stock price at $5.41, the fact that that reflects a 16 times PE ratio in a main market that trades at about 16 times. Although they're listed on the junior market, technically speaking, this is really a main market stock. You can tell by the market capitalization of $22 billion and the trailing earnings of $1.3 billion in profits. Stock price is traded at a high of $6 and a low of $3.35. On the next slide, you can see that in the last year, they've managed to grow their profits by about 40%. And if you guys remember, 2 weeks ago, I believe it was, we had Lascelles Chin on the program, and we talked about how they managed to grow the business. Here, it's pretty straightforward. They've managed to reduce costs by 13% while driving up sales by 4%. You put that together with top-line sales of $8 billion, there's no surprise that they finally topped $1 billion in earnings, growing in the last year by 40%. And I still think they have more legs for growth. So this is a great stock. Total assets, $10 billion. Total equity, $8 billion. Again, they are big players in the junior market. They really will move over into the main market later this year. And finally, on the next slide, it shows how that $1.3 billion of profitability has come about in the last 4 quarters. You can see they finished with a pretty strong fourth quarter. Fourth quarter has not traditionally been the best quarter for them, and yet they managed to come out with a pretty good fourth quarter. So Last M is definitely one of my top picks. Great, solid company. They're going to be around for a long time. It's a good buy. Okay, moving on to our gainers and decliners. Starting with our decliners first. First, we have G West, looky there. MDS, 8.66%, but that's going to turn when you guys see the audited results. Cargo Handles Limited going down by 8%. Sagicor Jamaica down by 5.53%, and AFS down by 4.62%. Looking now at our top gainers for the week, we have CPFV up 23%. KLE up 22% after getting a hammering last week. Trans Jamaica up 13%. Caprete up 12%. And Main Event up 10%. Okay, moving over to our last segment for the day. We want to look at the foreign exchange movement, and this is the usual first chart we show that shows the average devaluation rate of about 2.9% per annum over the last 4 years, with us ending last year at 142.65. On the next slide, you'll see that it's not always a linear journey. We've seen in recent years the dollar going up and down, sort of moving through a band, although you can see the trend is slightly increasing, but you can see where we've had a peak of 155 and a low of 140 in the last 12 months alone. But in the last 6 months or so, on the next slide, you can see that the dollar really has devalued by 6.76% in the first 6 months of this year. If you were to annualize that, that would translate to 13%. I don't think you need to annualize it. We feel, as a matter of fact, at 152.29, this is kind of pretty much the high for the season, and you're going to see it trending back down a little bit, we think. In general, of course, we still think the dollar will continue devaluing for the full year, but I do think over the next 2-3 months, tourism is definitely coming back strong. We see the hotels, some are reaching as far as 80% capacity. If you try to book a flight out of Jamaica this week into next week, you'll find you cannot book a flight to Florida or New York. You have to book for 2-3 weeks. The airlines are trying to add more flights to keep up with the traffic. So there's no doubt in our mind. And then we're looking to see cruise ships coming back in August, the first set starting in August. There's no doubt in our mind that tourism is coming back strong, and with it, some flows of FX. So let's watch how the dollar plays out over the next 3-4 months, but I don't expect any significant further depreciation over the next 2 to 3 months because of the tourism inflows. Well, that was a great week. We missed you, Chris and Gary, but we didn't because we had great company in the form of MDS. So to our viewers, thank you all for being a part of our weekly investor forum. I'd like to also thank our very special guest for today, Kurt Booth from MDS, for participating in today's investor briefing. We're certainly looking forward to having yet another insightful discussion in the upcoming weeks. Be sure to follow us on social media to stay up to date with what's coming up next and to tune into our live streams. Don't forget to subscribe to our YouTube channel, Mayberry Investments Limited. Thank you all to our viewers for tuning in today, and remember, wise investors, slow and steady wins the race. Goodbye.